What we're going to be looking at today is what's been happening in the news in real estate this past week or so. Around this time every year, there's a lot of alarm bells that go off in pretty much every industry. People talking about the market's crashing and the world is going to end. I've been hearing this story probably upwards of about 10 years now. I used to be involved prior to real estate, which I've been in it for about 5 years now, in doing renovations and flips and that sort of thing. And for about 10 years now, towards this time of year, you keep hearing the stories about how the year coming up is going to be the worst year ever. The real estate market's going to crash. The stock markets are going to crash. Everything's going to crash. And for the last 10 years, they've been wrong. And usually what happens is around the end of the year, November, December, January, everyone comes out with these really dire predictions about how the upcoming year is going to be just absolutely horrible, and the market's going to crash and everything like that. I said, and then by the end of that year, they forget the predictions they made the year before that were exactly the same, and then they start saying about how this past year was amazing. It was a record year in real estate, and the markets did really well, and everybody's happy. So that usually is the pattern that's been happening for the past at least 10 years as far as I can remember. Earlier this week, CMHC put out a notice saying that, as it was reported, CMHC raises the red flag about housing and citing spillover from Toronto and Vancouver. They're not wrong. Basically, what they're trying to get at in the article is that currently CMHC keeps an eye on the housing market in Canada. CMHC is the Canadian Mortgage and Housing Corporation, for those of you who don't know. They're the ones that insure mortgages that are where people have less than 20% down payment. At least they're one of the primary insurers. They're a government program, and they currently have the warning level set at moderate. So they're talking about the overheating of the housing market, and they're looking at trends in pricing, increases in house prices, affordability, and all that sort of stuff. So right now they're currently at moderate, and they are coming out with a report next week. It should be released on October 26th, where they're going to raise that to strong. And for them, strong is a red flag type warning, mainly because they're looking at affordability of housing in Toronto and Vancouver, the two main centers in Canada, and they're looking at the spillover effect. And so we are definitely experiencing that here in Hamilton. I know people in Guelph and Kitchener and all these other areas sort of within a radius of the GTA are experiencing the same thing. People can't afford housing in Toronto because the average house price is roughly $1 million. So they're spreading out. They're going to places like Burlington, they're coming to Hamilton, and they're looking for more affordable housing here in our area. This has been happening for a long time. Like I mentioned, actually coincidentally enough, the day before the CMHC report comes out will be my 5th anniversary in real estate. So I've been doing this for about 5 years now, or almost exactly 5 years. And ever since I started, my very first client actually was a family, a young couple from Oakville, who only had about $200,000 to spend, and they're renting a home in Oakville and had no hope of being able to afford to buy a home in Oakville. So they contacted me here in Hamilton, and we took them to see a bunch of properties, and ended up buying a semi-detached home in the east end of Hamilton for I think $196,000 at the time. And they've been there ever since, and that trend has been continuing. The prices in Hamilton are going up because the pressure's coming from the GTA. There's more demand and the supply isn't as high. Therefore, prices go up. That's what happens in a free market. People have been benefiting by selling their homes at much higher prices. And at the same token, there are people who are finding it tougher to buy their first home. So people here in Hamilton are similar to the ones I used to take from Oakville to Hamilton, but now I'm taking people from Hamilton to Welland or Thorold, or referring them to my partners there to look for houses there that are a little bit less expensive than what's happening here in Hamilton. So that's the CMHC comes out, they make this report, and then Maclean's magazine usually jumps on this kind of thing. I don't know if it's to sell more magazines, if they truly believe in what's going on. I have no idea what their motivations are, but they seem to be more on the alarmist side. They've put out many stories over the years about the Canadian housing market bubble and how it's going to burst any moment. and we're still waiting for it to burst. And basically, if you have a look around, there are some competing stories. So if you look into the Financial Post, which is actually a conservative paper in general, it's Conrad Black's paper. It's meant to be the conservative voice and the liberal, to counteract the liberal media in Canada. And basically, the headlines in the Financial Post and how they interpret it is saying Ontario is said to be eyeing subsidies to bolster bottom end of the housing market rather than to cool the top end. So the Ontario government is looking to help out these people who are having trouble purchasing their first home. There are a number of programs already in place. I won't get into describing them all, but I'll cover them in another video. But if you are a first-time home buyer in Ontario, in Canada in general, there's a couple of plans you can get into. One is the Homebuyers plan, which allows you to take up to $25,000 in a single year out of your RSPs to use towards a down payment of a home if it is your first home, and then repay that, so buy back your RSPs over a 15-year period interest-free. So you're loaning yourself money and paying yourself back interest-free over a 15-year period. In addition to that, there is a tax credit. So you can claim up to a $5,000 tax credit if you've purchased your first home against your income tax, which will give you up to a maximum, I believe, $750 tax rebate. So when you file your taxes, you just make sure that you include the fact that you purchased a home in the previous tax year, and you can claim that rebate and get that tax credit back. In addition to that, there is the land transfer tax credit. So here in Ontario specifically, if you are a first-time home buyer or if you haven't owned a home in over 5 years, you can qualify as a first-time home buyer again, and you get this land transfer tax credit. So what happens is they'll give you up to $2,000 back as a rebate on your land transfer tax. So if you're purchasing a home that's roughly in the $200,000 range, your land transfer tax is roughly $2,000. So you'll get the credit and you'll not have to pay that land transfer tax. It's something that usually happens in the background with your lawyers and that sort of thing. If you are purchasing a much more expensive home, say $300,000, you'll probably end up paying about $950 as a land transfer tax is roughly $2,950. So they'll give you the credit for the $2,000, and then you'll get the $950 you'll have to pay as land transfer tax. So there's already some existing programs to help first-time buyers purchase their first home, and the Ontario government is looking at some additional programs to help people who are having trouble, especially first-time home buyers looking at purchasing their first home, just a little bit of a leg up to help them save up a down payment or use their savings towards purchasing a home. Aside from that, there's another Financial Post article that came out on October 18th, written by Gary Marr. And basically it says, housing in Canada overheating, but don't expect a collapse according to this new report. The report comes from Moody's, which is a fairly conservative accounting analytics firm. Basically what they're doing is looking at the market as a whole. And what they're noticing is that the market already is slowing down. I know it's hard to believe depending on where you're from and you're hearing about bidding wars and all this kind of stuff. But if you're looking at Vancouver and Toronto, there is already been a slight slowing trend in those markets. So what they're looking at longer term is what they call a soft landing versus a bubble bursting or a hard landing. What now overall in Canada, the average increase in pricing is about 8% nationally, year over year. So they're talking about a gradual slowing of growth. So they're not talking about the housing market collapsing, or they're not talking about the people losing money on their homes, but instead of growing at an average of 8% a year, you'll be growing at an average of 2% per year. So the growth is going to slow down. But again, you're not losing money on your homes. They are concerned about some smaller cities. There may be price declines in some very small cities scattered throughout the country where housing demand isn't as strong. I mean, we like to focus on Toronto and Vancouver, but there's a lot of space in between. So if you're looking at places out in northern Alberta and Saskatchewan, all around Quebec, northern Ontario, Manitoba, and all this kind of stuff, the market is very local. The market is very specific. So you want to talk with an agent in that specific area to find out what's happening. They're also concerned about areas that are affected by commodity prices. So you're looking at Alberta, Saskatchewan, and places in Newfoundland where the markets are very dependent on things like oil prices, and in Saskatchewan, things like potash. So as these commodity prices are low, like the oil prices have been low for quite a while, and it's fairly negatively affected, especially the Calgary real estate market. They've seen decline in pricing of up to 30%. This is not new for them. If you talk to people who have been in the real estate industry for decades in these areas, they've seen these ups and downs as the oil prices go up and down over the years. It's one of the pitfalls of being very narrow, I guess, in your economy and not having a diversified enough economy. There are other things obviously going around in Alberta and happening in Alberta, but the oil industry really drives markets there of all kinds, not just the housing market. So that's basically what's happening nationally. Most economists looking at these things aren't panicked. They're not speaking about bubbles and that. The only people profiting off talk of bubbles are people that print magazine articles that talk about bubbles, and they have been doing, like I said, for probably about 8 to 10 years at least now, from my recollection. So is the housing market going to burn down anytime soon? No. Are you looking for a humongous crash? No, especially here in the Hamilton area. Our market, again, it's very local. It's driven by a lot of different things. The first thing is immigration, migration, and affordability. Those are sort of the three linchpins here in Hamilton. Job availability is another one. Our unemployment numbers are very low compared to the rest of the country on average. So there's opportunities for jobs. Businesses are moving here. People are moving here to start businesses. So that's happening quite a bit here, which is attracting a lot of people. But essentially, immigration helps a lot. People move to the country and need a new home. So that's driving part of the industry. Migration is another one. Migration is mainly movement within the country. So you're looking at people, again, moving from Toronto where it's too expensive, coming to Hamilton looking for places to live. And that is driving our market quite a bit. And affordability goes with that as well. You're looking at prices in Toronto. Like I said, the average two-story home in downtown Toronto is somewhere around $1 million. The average house prices in Hamilton are well below $500,000, in the $450 to $470 range on average across the city. But there are places that are much more affordable than that. So have a look in your local markets. If you have questions, I'd be happy to talk about this, happy to answer any questions. Have a look for a future video. We'll get more in depth about first-time home buyers and the credits available to you and how you go about applying for them. If you have any other questions for me, I'd love to see your comments below. Please feel free to ask questions there. Private message me here on Facebook. This video will also be posted on YouTube along with all my other Facebook Live videos. Feel free to contact me, Tony, at thegeekyagent.com. Visit thegeekyagent.com or find me on YouTube, like I mentioned, youtube.com/thegeekyagent. Anywhere on social media at The Geeky Agent. That's pretty straightforward. Find me on Twitter, Instagram, Snapchat, all those kind of places. Or give me a text or a call, 289-237-9896. I'd be happy to have a chat with you about your specific situation and how I can help. Last thing, nice little shout out to my friend Bruce Johnson, Motorcycle for Miracles. I was happy to be a champion agent for Motorcycle for Miracles. What is Motorcycle for Miracles? Bruce and his daughter Holly rode their motorcycle across Canada, visiting children's hospitals all across Canada, raising money for them. They've raised over $100,000, a humongous chunk of that going to sick kids in Toronto, and around $30,000 or so going to local children's hospital, including McMaster Children's Hospital. I was happy to donate and be a champion agent and to just be involved in the whole process. Bruce and Holly and his family are just amazing people. They've got their own story. I urge you to check it out at motorcycleformiracles.com. Find the link. I'll put some links below. You can have a look if you'd like to make a donation to your local children's hospital. Great. With every person that I help buy or sell a home, a portion of my commission that I'm paid is donated to McMaster Children's Hospital through the Children's Miracle Network. So I'd be happy to, excuse me, I'd be happy to help your family either buy or sell a home and make that donation on your behalf. So again, feel free to contact me here through Facebook. I'm just going to wait out this rainy day and find some other things to do around here, maybe read some comic books or something. I'm not sure. I'd love to hear from you, but in the meantime, as always, I hope you have a great day.